All right, guys. I want to talk a little bit about BitBond Math here. And I got a little presentation. So wait for some people to join. Let's just see where we are here with this BitBond Math. Right, let's get this presentation online. Hey, guys. I want to share this presentation with you guys. Let's see. How do I get this thing working? Of course, they changed all the formats here. Okay, here we go. Let me do this. This would be better. Okay, great. All right, I'm going to talk a little bit about BitBond Math here, and I think this is going to be an interesting presentation because I think a lot of people have been throwing around ideas here, but they haven't been looking at really the actual math very carefully. And so I went back and I looked at the VanEck presentation, which was done at Bitcoin. It was done in April at Bitcoin price was about 90K. It was done at the DC Bitcoin conference. I can't remember the name of it, but we can go back and take a look. But I want to talk a little bit about exactly what are the numbers on Bitcoin math, because I think a lot of people were sort of throwing out some crazy numbers, and we as Bitcoiners, we all get very excited about the we get very excited about the prospects for Bitcoin, but I wanted to actually go through the exact numbers on this Bitcoin math and sort of show you how the numbers pencil out. Okay, so let's just go. First of all, let's talk about the idea of this thing, and the idea is very simple. Let's talk at first for the U.S. Treasury, right? So the U.S. Treasury would create a 10-year, $1 trillion bond. In the case of VanEck, the number they created was a $2 trillion bond. But let's just take $1 trillion as the number. The Treasury would then take the $1 trillion bond and would take 10% of the proceeds of that trillion, and they would buy $100 billion worth of Bitcoin. Okay, so 10%. Okay, so that would be they would offer a guaranteed yield of 4.5% to the investors. And in the VanEck presentation, they sort of talked about a 1% coupon, but I'm going to go with a 0% coupon because I think it makes the math a little easier. And so at the end of the 10 years, this is a little bit where it gets fuzzy, but 50% of the gains of the BTC would be paid back to the investors. So the investor is guaranteed 4.5% yield, which is the current yield roughly of the 10-year bond. But they would get, in addition to that, right, they would get 50% of the gains of the Bitcoin. Okay, so let's now sort of look at how that math comes out. And let's look at it first from the investor's point of view. And I'm going to look at the low case first, right? So let's assume the investor comes in and says, I'm going to put $1 million into this new Treasury bond, right? And they say, well, okay, at 4.5%, if I invested it in regular Treasuries at 4.5% with a 0 coupon, I would get 1.55 million. How do I get that number? I basically take 1.045 and raise it to the 10th power. Okay, and that number becomes 1.55 million. But once we clear this hurdle rate of 4.5%, they're entitled to 50% of the Bitcoin growth. Okay, so assume now that the Bitcoin goes to 1 million. So we go from 100,000 to 1 million. Okay, Well, for each $1 million bond, 1 Bitcoin is bought, right? Because we're going to take 10% of that, so it's 100K. We're going to buy 1 Bitcoin. Okay, that gain on that Bitcoin is 900K. So half of that gain would go to the investor, right? And again, there's many ways you can kind of phrase this, and I've gone through this thing many times with ChatGPT, and so it all depends. Do they get half the gain? Is there some threshold? Let's just say they get half the gain, okay? Well, they're going to get the 1.55 minimum gain, plus they're going to get 450K, which is half of the 900K. So they're going to effectively get $2 million, right? And invest 1, get 2, and that gives us the rule of 72. And that gives us 7.2% ROI, right? So from the investor's point of view, if this low case happens, all of a sudden they are going from a treasury that yields 4.5% to the same credit issuer yielding 7%, which is great, right? And we'll go into, well, Fred, you're too cautious, et cetera. I'm going to look at the cautious side first, okay? And then I'm going to go to the more aggressive side later. And we'll look at the actual spreadsheets here, but I really want you to look at, this thing really kind of from a macro point of view without getting too caught up in the numbers right now. Okay, what does it look like from the Treasury's perspective? Okay, let's look at it from the other side, from the Treasury's perspective. Well, from the Treasury's perspective, for every $1 million that they raise, right, they're going to get 900K immediately that they can do whatever they want. They're also going to get 100,000, but that $100,000 is going to be used to buy 1 Bitcoin for every million, right? And at the end of this, they're going to have to pay, in the case that everything works out well, they're going to have to pay $2 million to that investor, right? So that's 7.2% payment, right? But they're also going to have $1 million in Bitcoin to pay that $2 million, okay? So effectively, their cash flow is going to look like, okay, they have $900,000 coming in on year 0, and they're going to get $1 million from the Bitcoin, and then they're going to have to also pay the 2 million. So they're going to be out $1 billion in year 10, right? And effectively, that means their net borrowing cost has been reduced to 1%. Okay, so we've gone from, I have to pay 4.5% a year. How do I even make this money? How do I I've got $7 trillion of this thing maturing. So now I pay 0. My cost of interest has gone to 0. Okay. And my cost of borrowing. And in a year, I'm basically hand a little bit more than the initial money that I paid out, right? Which is 1 million. I got 900K. Fantastic. Now, part of that can go to the Bitcoin reserve, et cetera. The main thing is we've cut the borrowing costs from 4.5% to 0%. Effectively, we're cutting it to 1%, right? And that's at this very I would say conservative. Now, the panelist from the FT would say it's crazy insane, but I would say it's conservative, right? And so we'll take a look at some other scenarios in a bit. So now we were talking with Darkside, and I think this is a really transformative instrument, right? And I agree with Darkside. This is a completely transformative instrument because all of a sudden, we go from this massive debt problem to there is no debt problem, right? If we start refinancing all of this stuff like this, we don't have a debt problem anymore, right? Like we've basically kind of solved our debt problem for the next 10 years. And there's a lot of stuff we can do. We can choose to, borrow some more with this. We can rolling like this. We can keep some of the Bitcoin, whatever, right? And the amount of Bitcoin is enormous, right? So again, if we take for every million, you get 1 Bitcoin, right? So for every Bitcoin, for every billion, you get 1,000 Bitcoin, right? For every trillion, you get, for every million, you get 1 Bitcoin. For every billion, you get 1,000 Bitcoin. For every trillion, you get 1,000,000 Bitcoin, right? So if they did 2 trillion, that would be 2 million Bitcoin that they would get. Now, they're not going to be able to buy that immediately at the market, but you get the point, right? This is a very, very, and I'll go over that. So somebody's asking, Bobby, why don't we see gold bonds structured like this? And I'll explain why. And the reason why is there's something fantastic about this structure is that it's relying on this extremely high CAGR of Bitcoin, right? And Tom Young asked me the same question the other day. It's like, hey, Fred, this thing could be applied to a lot of things. It could be applied to real estate, anything. True, but there's nothing that we know that is likely to go 10x in the next 10 years, other than Bitcoin, right? That in the low case, right? There isn't anything that's growing at a 40% CAGR. And by the way, this was at a 25% CAGR. We'll look at this thing at a 40% CAGR in a second, right? But yeah, you can, but there is no other Bitcoin. There is no second best, right? I potentially argue maybe Solana, but that's like highly risky, and I don't want to piss off people. But probably somebody would do something like this with Solana, maybe, but it just doesn't fit the mold of this. Solana feels like just kind of like a crazy angel investment, and this is core finance, right? So that's that. So now let's ask ourselves this: is the U.S. Treasury going to be the first person to do this? And I agree with Darkside that it's unlikely that the U.S. Treasury is going to do this. Who's going to do this? Well, I would argue it's going to be a corporate, right? Okay, so the U.S. Treasury can issue debt right now, 10-year debt at 4.5%. What about a single A credit? Okay, and a single A credit would be something like Nike, right? Well, the credit markets are fairly tight right now, so they can actually issue at below 100 basis points, right? So for Nike can issue a bond at 5.5%, no problem, right? They can issue a 10-year bond. But let's just for sake of argument, let's assume we're talking about a 6% issuer, okay? And we're going to go there next. And so let's just take this exact same math, okay? And we're going to take the exact same math, and we're going to say, what if instead of the U.S. government Treasury issuing this bond, what if it was a corporate issuing this bond, okay? Like Nike. Let's say Nike issued. Let's do it. Mainstream doesn't get. I hope, Thomas, let me see if I can invite you up to my show a little bit. We can talk about this. I got a different setup here, so I won't have the audio problem. Let me see. So anyways, let me first, before I invite Thomas up, okay, I'm going to invite Thomas to my space. 1 second, guys. X. Thomas. Tom Young. Thomas Young. And I think part of the reason some people don't get it is they just haven't actually. Okay, Thomas, I sent you an invite. You can go get it. But I think people haven't gone through the math quite enough. Okay, but let's now look at this corporate scenario. Let's look at a 6% issuer. Okay. Well, the investor ROI. So they're going to promise people. They're going to say, normally I give you 6% bonds. Okay, let's add Thomas to the stream. Okay, Thomas, can you hear me?
Yeah, I got it.
Okay, good.
All right.
So now we're going to look at this 6% issuer case, right? And I'm going to show this. I'm going to go over the spreadsheet here a little bit. But basically, the ROI now is guaranteed at 6%, right? And I'm going to look at the case of the 25% CAGR, right, which is sort of a 10x Bitcoin over the 10 years, right? Well, as it turns out, you can look at the math. It doesn't matter what the issuer's cost, because they're going to pass it all on to the investor anyways, and the issuer net cost is going to go to 1%, right? So the issuer cost is going to go to 1%, and the risk to the issuer is really very simple. Do you believe, you the issuer, Nike, are you comfortable making the bet that Bitcoin's going to at least double in the next 10 years? If you are, you're going to be better off issuing this bond than issuing your regular bond at 6%. That's just the math, right? And so the issuer here, they are taking a bet on Bitcoin. The Treasury is taking a bet on Bitcoin, but the bet's pretty reasonable. It's sort of like, will the Bitcoin price not double in the next 10 years? If the Treasury is willing to make that bet, they are going to get a much lower cost of capital, right, by doing this. If the investor is not now, and I agree with Darkside, somebody's going to take this bet, right? Somebody's going to take this bet. It's just the numbers are just so compelling. I don't know if you missed the very beginning, Thomas.
No, I caught up, Fred. I saw your slides here.
Okay.
I've talked about this morning. I was in town hall and we had various meetings. Anyway, the municipal finance committee meeting was there, and we discussed this. The reaction I got was not hostile, but people just say, we're not doing that, and it just I didn't push it too hard because, anyway, my colleagues were there, and so we talked about it. We're a long way from Main Street adoption here. Now, having said that, I'm familiar with the math. I've talked to Darkside about this a lot. I've run some numbers just like what you did, and someone's going to take this bet. I mean, it's too compelling. It's like a bond in the form of a long dated call option, and there's two parties to that trade.
Right.
So again, it's very compelling. Someone's going to do this, and once they start doing this, and people see the impact of the cost of borrowing.
Well, let's just look at this super simple spreadsheet here, okay? I want to walk everybody through this super simple spreadsheet, okay? So here's the parameters. We're saying that the investor's getting at 50% share of the Bitcoin, right? Of the Bitcoin gains. We're going to talk a 10-year term, right? We're going to talk 26% CAGR, okay? And we're going to say a 6% interest rate, right? By the way, what is the interest rate of your municipality right now? Net. I know it's tax free, but
I think it's low, just below 4, because it's triple tax free, all that stuff.
Right. And by the way, I should mention that Van Eck is sort of saying the Treasury should do this and make it tax free. Will they do that? Probably unlikely, but that they are trying to push that angle too. So 10% Bitcoin purchased. So again, let's just say they're doing $1 million worth of bond issue. I mean, you can scale this up as you want. That's going to equal 1 Bitcoin purchased at 100,000, right? The fair value of that Bitcoin is going to go to a little over $1 million at 26% CAGR, right? That's going to result in a $900,000 gain, okay? The guaranteed future value, which is just the initial amount grossed up to the 6% rate, that's with that, right, is 1.79 million, okay? Plus, they're going to get their share of this $900,000. They're going to get 2.41 million. So they're going to get 8.4 million. Amazing return for the investor. They're getting a lot better than the stated 6%, okay? And the issuer cost, again, is they're getting $900,000 upfront. They're going to pay, they're going to get half of this. They're going to get $1 million later. So
yeah,
900,000 out, $1 million 10 years from now, and they still have to pay a little bit more. They have to pay 2.2 million. Their borrowing cost is 1.07. Okay,
so there's lots of ways to structure this. You structured this as a 50-50 split. There's one where you say, I'm going to give all the gain to the investor.
Well, let's just say 80% of the Bitcoin, right?
No, I'm saying like all the gains to the investor, but no ownership rights, meaning at the end, the issuer keeps the Bitcoin. So all you're doing is giving the investor all the gains for 10 years applied to the bond. So
Right.
I would run this and sell C10, make that 50,000 instead of $1 million to show the downside risk. What's the downside here?
What, this one here?
Yeah,
See,
just say Bitcoin crashes. It's just like,
well, I mean, okay, so if Bitcoin, I mean, yeah, we can look at Bitcoin goes to zero, right?
but it's not going to go to zero. It's most likely going to go to half.
Okay.
I mean, if you say it's never going to go to zero, I mean, that's crazy.
That's what I'm look, there's no scenario. The only scenario in which, look, I just think people are going to take this bet. I think that it's just
I
that.
agree.
Well,
Yeah.
at the end of the day, people are going to take this bet. Somebody's going to say, you know what? I don't believe your crap about Bitcoin 10xing, but I think it's going to at least double. You know what I mean? Over the next 10 years.
Yeah.
And I'm willing to take that bet, right? And
so rule of 72,
right. That's what
10 years, that's 7.2%.
Which is, look, if I put exactly,
Put it 72, put 7.2 on C3.
well, before I do that, let me just I'm going to move this thing back to 4.5% right here.
Yeah.
So let's just go back to the sort of thing here.
Yeah.
4.5% in interest rate, flat curve, and let's say the 50% of the Bitcoin, right?
Yep.
And
yeah, use 7.2 on Kager. That's doubling in 10 years.
Well, yeah, basically the investor rate is 7.2 almost. You see what I'm saying?
Right.
It is exactly 7.2 is my point. Okay. So there is no way that, like, if I put 7.2 here, right?
Yeah.
In my Tagger. Okay. This is a little funky, but if I put 7.2% CAGR, my Bitcoin goes to 200,000, right? Which is exactly what you'd expect, right? Okay. So then I'm saying, okay, I'm going to give half the gain. The gain is 100,000. I'm giving $50,000 of the gain to this, but this particular cell, I need to change it a little bit, but because then you're not near the threshold, right? You're just exactly almost at the threshold a little bit. But my point is and the investor interest rate here is almost the same as the Treasury. It's a little bit better, right?
And therein lies the magic, because there's these bit bonds structured appropriately have no downside risk.
They really don't. You know, I think that's really the bottom line is these things really they don't, but they're not going to get. And look, let's also let's take one last thing. I want to look at a higher CAGR, right? So let's look at a 40% CAGR, which is, you know, I think you and I both believe that we might see this CAGR over 10 years, right? It's very possible. Okay. Okay, let me go back to my restream here. Look at it this way. Okay, so in here, okay, I have a treasury. Again, we're doing the Treasury case, right? So now I'm making 11.4% on my interest rate. I mean, I'm loving life, right? I went from making 4.5. I'm basically more than doubling my interest rate. I'm making double-digit interest rate with a 4.5% guarantee, and this scenario could come to pass, right? Now, I think one of the things also to kind of remember here, this thing is wrong now. Just ignore this thing. But 11% interest, and the you know, here the government is basically putting down. They're getting $900,000 upfront. The Bitcoin is worth 2.8 million, right? You know, they've got, this is like, it's just a perpetual motion machine at this point, right? Like, there's no money paid back, right? Like, you basically can take this thing, you do not have to pay back any money, right? It's like you put money, you get $900,000 up front, and then you get more money in 10 years.
Now couple this with 21 Capital's aspiration to acquire Bitcoin,
Right.
and everyone else.
Right.
And when we do that, we know that there's a multiplier for incremental capital into the system. Let's say that number is 20 today.
Yeah.
We know that if they start doing it programmatically, the 20 becomes 21, 22, 25, 30 as the Bitcoin becomes more scarce. Because when institutions buy Bitcoin at scale, it has the effect of retiring the Bitcoin and shrinking the available supply for trading. Because it's, when it goes into cold storage, it's really, they don't take it out because there's been a blip in the price. Now, it may come out of cold storage at some point, but you have to start thinking about, if they're going to go acquire, because I think Mallers has said that they're going to acquire more than MSTR.
It's possible.
Well, I think they've said that, but now you say this is a source. These BitBonds are a source of demand, and people are going to go buy the Bitcoin with this because they're going to want to capitalize.
Right.
So I think you got to be, you've got to accept the bull case here as a reasonable scenario. And I think people might realize they don't have enough exposure here to this asset class. I certainly wouldn't want to be short. Now, in Vegas, I suspect that they're going to make some announcements. 21 Capital is going to make some announcements.
I'm sure they are.
I do not want to be short there. In fact, I'm trying to understand, like, when is 21 Capital going to be available for investors, and what derivative products are going to come out there. So, like, there's all this talk about MSTR and MSTY as an example. MSTY is the yield max product off of MSTR. Will there be a yield max product on 21 Capital? I would say almost certainly someone's going to do that. They're going to monetize this volatility. And what's different about 21 Capital versus MSTR is 21 Capital can be a little bit more creative, and they can be a little bit more aggressive because of their cash flows. They got Tether behind them with $1 billion a month. And then when you throw in BitBonds and you throw in Bitcoin sharing, now the Bitcoin sharing is something that MSTR won't do, meaning that they've had this issue where they buy Bitcoin, but they never want to part with it once they buy with it. I think 21 Capital will do that. They will part with some of the Bitcoin that they have as part of structured products. So
and maybe also more, look, I think the other thing is MSTR has experimented with convertible bonds, but they really haven't done that much with convertible bonds, right? We do not know. And I don't know why they haven't, but I suspect it's just they may have tapped out of the convertible bond market. That market may be done. You know what I mean? Like, that's not, and we've had, Rob sort of say, look, that market's not that deep. You know what I mean?
So Clausen is, he's sort of an expert in this convertible bond, but this market is not really that market. They're using that structure to free up trapped capital. Yeah. Now, I think they've been oversubscribed on their prior tranches, but I would say, the financial markets, once people see that there's a desire there, they're going to create private placements for this and help people with solutions here. I just think that there's an opportunity for companies to lower their borrowing cost and sell bonds that are effectively long-dated call options and have very little risk to the bar, because there's a lot of people out there who don't want the downside risk. Like, I'll just say, as a government official, I could not take downside risk on
Right.
any investment. It just can't do it.
Right.
And we're not in the business of investing. We're not a hedge fund.
Right.
But if I could ladder the products in such a way where I could start to create reserves on the back end of this
Right.
from partial ownership of Bitcoin coming off of these BitBonds,
Mm-hmm.
then that is something that I could explore. But I can't. Local governments won't lead here. This will be done by very smart, aggressive TradFi. And like I said, I'm very excited about what 21 Capital is doing. I haven't gotten I haven't talked to Josh or seen him post anything, but I got to think that at some level, his liquidation of MSTR is because he sees what's coming with 21 Capital and he wants to be positioned with his dry powder.
Yeah, I do think he's making, well, I think he said a couple things. One is he said he does sort of see a pullback, right? So he's looking at these pullbacks like,
Fred, I don't know if you're jumping back in. It looks like you got disconnected. I'm having all kind of glitchy video here. I'm going to drop off here.
hello, hello. Test. Okay, let's see if I can get Tom Young back. All right. Well, I don't know if anybody's still listening. Okay. Anyways, I think that's more or less it. Tom sort of, okay, Tom Young joins, adds a stream. Let me do that.
Fred, I'm back in. So
Okay, yeah, sorry, I lost power there. But yeah, look, huh?
looks like you're in your office down in Santa Monica.
Yeah, exactly.
Were you in one of those breakout rooms?
I was, because these guys next door were a little loud, so I just decided to go to one of these breakout rooms. But yeah, look at my nice view. Look at that.
That's nice. So you and Ben share an office there?
We got a little corner office here. Yeah.
Nice.
Pretty cool. Yeah. Anyways, so we have a few programmers who come in, but they tend to, they're like vampires. They work super late at night. And they come in.
That's great. I mean, those spaces that you're in, the flex office space, they allow for 24/7 access, I assume. So
they do, but they kind of roll. These guys roll in late, but they do kind of roll in, but they roll in late.
So, Fred, I think we're going to see a summertime innovation on these TradFi products coming out of Vegas. I think you're going to see it's going to be led by Cantor with the 21 Capital, and there's going to be tremendous innovation here. And
the other thing is Cantor is very close to Trump, right? Obviously, right?
Yeah.
And so, look, I definitely think these BitBonds, it's not inconceivable that we see one of these bit bonds start getting to the proposal level later on this year. You know what I mean?
Yeah.
I think if things start going well for Bitcoin, and then Trump can sort of say, listen, I told you about this stuff, it's good. And now we have this revenue neutral way to kind of come in with these bit bonds. It's going to lower our borrowing costs. Scotty B is behind it, blah, blah, blah. I think we might see the first bit bond, maybe early 2026. You know what I mean? I think that could really happen. I really do.
I agree. And then I also just think of the acceleration of buying that's coming from the likes of 21 Capital and others. We're going to see a rise in price that's going to surprise people as we move through the balance of this year. So while we may have a bit of a drawdown, it could just be the doldrums at the end of the spring here.
Sort of, look, I'm not a trader like Josh. Like Josh inherently, he wants to trade. Like, even if you told me, Fred, there's a very high likelihood that we drop 10,000 points on Bitcoin, my answer would be like, so what am I going to do?
Yeah. Well, I mean, you have taxes also. I mean, the round trip on taxes is something you can't. Yeah, you can't do it. So I follow Josh. I trade some of his stuff on the edge, like the IBIT options.
Right. I mean, on the edge, but it's like, it's like 5-10% of your portfolio, right?
Yeah, and it's it's probably not even profitable to do it, but I do it because it's entertaining. I took some positions in the IBIT.
We have to be entertained. Yeah. The hardest thing in this whole game is doing nothing, right? That's the hardest thing.
Yeah. That's look, to me, it's a lot of fun. I'll do 0-day options. Yeah. Which is almost pure gambling, right? And if I make money, I take the money and I put it on my fold card. Okay. And then I spend it as if it's the only money that I have. So I could go away for the weekend and I made $900 on a 0-day trade, and then I'll use the AI to track all the expenses.
Fold credit card, by the way? Yeah, I know they.
No, I have the Fold debit card. I don't think they've come out with the credit cards yet.
Okay, they announced it, but I don't know if
they did, and there's a waiting list, and I'm high enough up on the waiting list that I'll get one. The CEO of Fold too, I think, right?
Well, we've met online, but that's it.
Yeah.
I've met one of the guys there, Matt Luongo, who I think might be the used to be the CTO of it.
Yeah. I like it. I mean, I like their interface. It's nice. I have Cash App as well. I have Venmo. Venmo does stuff, and I think like younger people use Venmo for settlement, but I find older people don't use these apps too much. Zelle is one that's used a lot, but I think you're gonna start to see it move that way. Like, so as an example, you might see these credit card machines where if you use a classic bank credit card, they're gonna probably put a sign somewhere, but they're gonna put the merchant fees on the buyer. But if you use one of these cards, that has stable coins on it, or like a Fold or something like that, they can be like no fee, and that's going to be. You're going to start to see, small merchants who 2 or 3% merchant fee is a big deal for them. So,
no, it's very significant. And look, I think the other thing that's really going to happen, and I've been, just sort of pounding the table on this, is we are going to have this explosion in stable coins in the next 12 months. Like, you don't think so, you're wrong, because these stable coins are 100% coming, and it really is going to be like, I don't know who was saying this, maybe it was you, were saying QR codes. Remember QR codes? You couldn't pay you couldn't use QR codes. I think it was Darkside was talking about these QR codes. Like, QR codes used to be a weird thing. You used to have to get an app to do QR codes to read them.
Right.
And now, like, you go to any restaurant, the menu is a QR code. You know what I mean? Anywhere.
And it's built into the camera systems now for Android and iOS. So, like, I use streaming on Apple TV, and I have to constantly just relog into my systems. And I just take a picture with my hold my camera up to the TV, and it logs into HBO or Hulu or whatever the hell I want to watch. It's great. It saves a lot of time remembering passwords and all that stuff.
And I think that pay with stable coins is going to be very similar, right? Pay with a stable coin is going to be very, very similar. In a couple of years, this is not going to be like, well, what is a stable coin? Do I need a crypto? Like, no. Pay with stable coins is going to be a normal thing. And you're going to have custodial things like Fold or Cash App that you can send a stable coin from. Right?
Yeah.
You have a balance in Cash App. You want to send it, you can send it with that. Pay with stablecoin, right? From, you know what I mean?
So in the crypto world, we'll use stablecoin, and we know what that means.
Yeah.
I think in normie land, I think it's a dollar proxy. So what are you going to pay? I'm going to use a dollar proxy. And what's interesting for merchants is because it has some level of programmability to it. I want to say almost like private CBDCs, right? So it allows for me to track a lot of information about users and incent them to do so. So I can do loyalty points, cross-franchise marketing. If I spend money here, I get a credit there, all kinds of stuff. So I like the innovation that's coming. When I think of 21 Capital buying so much, MSTR is going to try to compete. Others are going to jump in.
Yeah, but to get back to the why Josh is, I feel like Josh, there's two things that's going through Josh's brain. Well, three. Taxes probably is one. Two is, I think, the trader in him thinks there might be a pullback. Okay, which I don't care. Like, it doesn't matter. And the third is he senses that there may be better opportunities than MSTR. Right.
Yeah.
Like in terms of like potential structured product,
So he was he was making money on his other trading that he wasn't publishing. And that was substantial. So you add up all this. This was a nice way for him to settle up his taxes. But I think his frustration with MSTR was they kept hitting the ATM and they didn't let the MNAV expand. And his option positions were decaying while Saylor was basically keeping a lid on the stock. So he's like, okay, well, I don't know how far he's going to take this. So it doesn't make sense. I wouldn't do that if I were him. So he just backed out. And I think he's flipping over to IBIT options as his play. Now, IBIT is not near as volatile as MSTR. So he has to change his trading strategy and maybe just be waiting for what happens with the structured products around 21 Capital, which I believe will be as volatile in terms of the implied volatility metrics as.
Well, also there's a new kid on the block. I mean, there's going to be a lot of people who are they're just bored. You know what I mean? They're just bored they're bored with like, what can I talk about Saylor or MSTR? They're looking for a new story, right? This is going to be that new story, right? Everybody's going to be like, well, what about Mallers? What is Tether going to do? What's up there? You know what I mean? Like we've already had Saylor on our show 20 times. Now let's hear it from Jack Mallers. Let's hear it from Paulo. Let's hear it again from Lutnick, who's the Commerce Secretary. Let's hear what they have to say about their new 21 thing. Like, so I think from just a story perspective, this is going to be a hot story. You know what I mean? And
I totally agree.
David Bailey trying to push his thing. He's got a little bit of a different angle. But the noise level is going to be high. You know what I mean?
Well, and Bailey's going to use the conference. It's his conference, right? So
it's his conference, right?
I just think that, we had Bailey on one of these spaces, and and I asked him about the what they're going to do with the Sphere.
Yeah.
You know, they got that big concert facility right next to the venue.
You can see it from
they're going to do
the
they're
right.
going to do something there. They're going to do some big,
You know, there's
cool,
going to be a big Bitcoin there. You know it, right?
absolutely. But they're going to do some kind of a show or presentation, something that's going to be knock your socks off. Because look, these conferences are big business.
Right.
He has to up the game from Nashville, set a new bar, and
Right.
have people come away, because these tickets are not cheap.
No.
They're not.
Well, even I feel pretty poor looking at that whale pass. I'm sort of going, Jesus Christ. Like, I don't know, what, 11 grand for a whale pass? Like, I don't know, man.
It'll be more by the time you wait. If you wait to buy it.
I'm not, I just, too rich for my blood, you know, too rich for me.
Fred, you wouldn't even notice it.
But I know, but it's just like, you know, I just feel like such a schmuck when I could have bought it earlier like you, but I feel like an absolute schmuck buying an 11,000.
No matter how much money you have, you don't want to pay $20 for a Coke.
Nobody does.
Yeah.
It really is weird. It's just, you know, I got a little bit of that Warren Buffett in me that, you know, I'm just sort of like, my car.
Yeah, I'm that way. I can't enjoy the $20 Coke. I just can't do it. So I wouldn't buy the whale pass now. I don't know why I did it. It's just like I did it right after Nashville. But, you know, it is what it is.
So somebody's saying, I don't think 21 Capital will catch. You know, it doesn't really matter whether this thing is not measured by how much Bitcoin you have. This is measured, like, we're in an attention economy, right? What's going to be relevant is how much attention does these people get, right? And I do feel like MicroStrategy 2024 was kind of the year of MicroStrategy, really. You know.
Yep.
You know, you could sort of say 2023 too, but let's just say 2024 was really the year, right? They kind of confounded a lot of people, including me, you know, who was kind of very, you know, and I owned it from 2023, but like, you know, I kind of like got out and got back in. I have a little bit, but it made a lot of people were betting against it, and they just got clobbered, you know, just Martin Shkreli in particular.
I don't think I get why people say that they don't think 21 Capital can catch them, and they're probably right. But I ran some numbers. It's possible if they get the institutional adoption as the preferred player here for like BitBonds and other things like that would allow them to buy a shit ton. Plus, they've got Tether behind them. You know, I wouldn't rule it out. I don't think it's likely, but I think it's plausible. Put a percentage on it, 20, 30%. It's not zero.
I'd say 50%.
Yeah. Well,
if I as a betting man, look, Maharshi Masan does not play around.
No.
Does not play around. Like everything I've seen of that man is he goes 10 times what you expect. You know what I mean?
And then also think of their interest rates for them. You know, it's just different hurdle rates, the way they look at capital, the way they have a longer term perspective. I would say the Japanese investor is probably a more patient investor than American investors.
Right.
So you're going to see, I'm so bullish right now. It's again, going into Vegas, I just think we're going to see an all-time high going into Vegas. I think we're going to see a lot of exciting news coming out of that.
And look, here's the thing. Where was Saylor in terms of Treasury holdings at the beginning of 2024, January 2024? He had I want to say maybe not even 200,000 Bitcoin, maybe, right? Something like that.
Yeah.
Right?
I don't know if it was that high, but
maybe it's 150,000, right?
He's acquired quite a bit last year.
Right. Okay. So he acquired a lot last year, right? He acquired at an average price, by the way, of about 80,000 now. I think his average.
Yeah.
What?
That's right. Yeah.
Okay. So he has a year, and Tether already said they're going to start with 40,000 Bitcoin, right? 21. So they're going to start with 40,000 Bitcoin. So really, they are maybe a year and a half behind Sailor, maybe,
Yeah.
with with like deeper backers, really, than Sailor. I think that
Well,
it is entirely possible they catch up. It won't be. It may not be in 2020, 2025, but by the end of 2026, I give them a reasonable shot of.
yeah.
You
I
know,
thought I ran some numbers. In order for them to get to pass them, it would probably take at least 15 months.
yeah,
Being
15 months.
reasonable,
I agree with that.
reasonable in the acquisition, right? You go too fast and things get haywire.
But look, for them, if they could come in and they can buy it at a 1.3 MNAV, they're fine. That's like, why not? You know what I mean?
But Fred, they can offer with their cash flows. They have the ability to offer structured. Like Sailor was doing 0 coupons.
Yeah.
They can offer a coupon on this that makes it a little bit more attractive. And by the way, 21 Capital could suck some of the demand away from MSTR. So Sailor rushing to buy, hitting the ATM.
Yeah.
He could be doing it for that reason. He knows what's going on here. He's
Well, look,
talking.
I mean, there's a scenario where MSTR drops by, let's call it 30%, something like that.
Yeah.
As these guys ramp up, right? So their MNAV goes from 2 to 1.5, okay, something like that, right? That could happen, right?
Yep, I agree.
And then all of a sudden you have 21 Capital is now trading at a higher MNAV than MSTR. Maybe that's how you measure success, is what is your MNAV, right? And now all of a sudden, Sailor looks a little bit like AOL. You know what I mean? Like he was first, but now there's a new kid in town.
But Fred, I would just say this: MNAV measures and sets enterprise value relative to your assets.
Mm-hmm.
And so you say, why is it more than one? Well, it's because there's some value attributed to the asset pile.
Yeah.
The first company that starts to exploit their stack through things like BitBonds or whatever the hell they're going to do,
Right.
And starts to generate yield products off of their stack,
Right.
you go from MNAV measurements to PE measurements.
Right.
And so we don't look at Google's book value or Facebook's book value because it's not relevant to their business model. It is relevant to an ETF in terms of what are the underlying assets you have, because that's what I'm buying. I'm just buying the assets. But when you have an operating concern and a going concern, well, then you're measuring on different things, and MNAV just becomes an afterthought. So how high can MNAV go? It can go to 10 if you're exploiting this.
Well,
But
if
all they're
you
doing
get
is
these MNAV, really high MNAV, you know what that you're going to do? You're going to start doing all kinds of acquisitions. Like Swan will be acquired.
everything.
Fold will be acquired, right? You know what I mean?
Yeah.
A lot of these things are just going to get wrapped up. You know what I mean? And now you're going to have this kind of Bitcoin, this Bitcoin sort of juggernaut. And it's just not clear what form it's going to be, right? We don't know, right?
So now throw in your other thesis, which I agree with, which is AI is 10x this whole thing we're talking about in terms of its impact on society.
Yep.
Now you have firms who historically have not been in the financial markets could now get into the markets and start to bring AI and finance and digital operations together.
Yeah.
I mean, I look at to me, the firm that is poised to, they're kind of late to market is Apple. They're late and they come in with the best products. And Apple, with their Apple Wallet, is poised to do lots of different things. They've already put their toe in the water with Apple Cash. They're doing a lot of different things there.
Mm-hmm.
They could very quickly enter this market and because of their UI design and their confidence with the user market, they could go to Main Street very quickly in a way that 21 Capital or MSTR could never do.
Okay, so what would they do exactly?
Well, they could start to offer Bitcoin related consumer services at the iPhone level, right?
Yeah.
Tied into the AI. They could start to do commerce marketing and create situations where they're trying to drive you. Like when Fold, as an example, is doing, like, you use your debit card, you get a Fold reward depending on where you go. Now all of a sudden it's tied into your ecosystem on Apple, and then you just make it very simple to use. I talk to people like this today. I was talking to people, and by the way, I'm cut from this jib myself.
Mm-hmm.
If it's too complicated, I just don't want to deal with it. I'm too, I like simplicity. Like, think of all the rich people that you know, Fred, who don't do things for themselves. They hire people to do it.
Yeah.
I can do my taxes. I know how to do it. I'm not going to do it. I hire somebody to do it.
No.
I could mow my lawn. I don't want to do that. I hire somebody to do it.
Well, your time is so valuable that if you take, especially as you get older, you're just like, I really do not want to. Don't want to spend a couple hours learning how to do it. Even if I know I will be successful, I am not interested in that, losing those couple hours, right?
So you and Ben have your office there in Santa Monica. You like to tinker. You're doing it because that's what you enjoy doing.
Right.
And you're learning about all kinds of things, whether it be the ordinals last year, Aave lending, you're doing that because you enjoy doing that.
Yeah.
That's not most people. And they don't want to go through the management of, how do I set up cold storage? How do I do multi-sig? How do I do inheritance stuff?
Mm-hmm.
How do I manage all that stuff when I can just go to my financial advisor, or I can go to Fidelity Digital Assets and say, just take care of it for me. And I'm going to go golfing. I'm going to go on a trip. I'm going to take a river cruise down the Rhine. I'm just going to go live my life. I don't think about these things. I don't want to do it.
Yeah.
And so I get the whole argument from all my Bitcoin friends when we go into Bitcoin today, a lot of Bitcoin maximalists.
Mm-hmm.
Like, you got a cold storage, not your keys, not your coin. The people I talk to are in a different place. I get their argument. I'm not saying that they're wrong. I'm just saying you've got to recognize that so many people just don't want to deal with it.
Yeah, I think it's going to change though. I do think that I think self-custody solutions, whether it's true self-custody or things like Cash App, I think that, the ability to actually send stable coins or Bitcoin is going to increase a lot, right? So I feel like having, I think more and more people are going to say, well, what do I really need these brokers or these structured products or whatever? Why can't I just use an app? Why can't I just have my money in an app? You know what I mean?
So think of this way.
Yeah, I think it depends on, like, if you're ultra high net worth, yeah, you still need the relationship. You want all that. You want the tax advice. You want all the relationship. If you're just kind of generally well off, you want an app. You know what I mean? An app's okay. You know what I mean? Like that's okay.
Think of the corollary between money in the analog world, cash, and what your checking account and your investments. And now think of this new world of Bitcoin related digital money.
Yeah.
You have, as a rich person, you have a certain amount of cash in your house. You may have $10,000, $20,000, $30,000 in cash. I don't know. People have different amounts.
Very little cash.
That's
sitting around like dollar bills. No.
I keep a few $1,000s all the time. I mean,
I don't use cash anymore. I rarely use it. I actually, right now, I have no cash on me, and I've had no cash on me for probably a month. Zero. Like I do not deal with dollar bills.
Really?
Yeah. No.
I would have guessed you walk around with $1,000 in your pocket.
No, zero. look, I'll show you. I literally don't even have a place to put here's my wallet, right? There's no cash. It's just a bunch of cards. That's it.
Yeah, I've seen those ads for those wallets online.
But that's it. That's all. I don't carry any cash. Now,
There's a clip there for it, right there.
There's a clip, but you know what? I've gotten to the point where I don't use cash anymore. It's like I don't need to. You know what I mean? And even if I go to places like the farmers market, you know, where they take Apple Pay now. You know what I mean?
Yeah.
I'm just clicking, and there's like one or two people that don't take Apple Pay and they take Venmo. So I really have literally had no need for cash anymore.
Yeah.
I don't need it.
But to me, cash is the self-custody of money. Like
it used to be. I mean, I think it's sort of like a 33 RPM record. It has sort of, you know, it's kind of has memories, you know, but there's one use I found of cash. There's literally only one area is valet parking. That's the one area, you know. What I was at a fancy restaurant the other day. By the way, if you're ever in LA and you want probably the best steak you'll ever eat, look up this place called Gwen, Gwen. Okay.
Okay.
And it's this kind of it's the latest sensation chef. The guy's Australian. His name is Curtis Stone, and he dry ages his beef. And you've got these like super crusty on the outside, like crusty, like beef, very rare on the inside. Like dry aged.
Yeah, yeah.
I had one of these dry aged ribeyes there, just unbelievable. But you know, I was sitting there going, "Oh shit, fuck, I forgot my cash." And there's a valet, right? Now, you know, that was a case where I literally couldn't park at the valet because I knew the valet would only take cash, and I don't have any cash. You know what I mean? So that's the one case I've run into on a day-to-day basis. You know,
I would have bet dollars to donuts that you had cash on you, but
I used to do that. Like
yeah.
I used to have like a little safe deposit box, and I always keep 10 grand. Always. I had always this cash, but you know, then I've sort of moved cashless, and so you know, and I always prefer to use Apple Pay rather than this too. I'm sort of in the process of losing this. That's my next step, right?
Yeah.
Is if I can. The only reason I don't use this is I'm a terrible manager of energy on my iPhone. My iPhone always dies. But if I can figure out how to kind of keep my iPhone alive, I need to always have like a portable battery with me. But listen, I think we're moving completely virtual, right? Like we are going completely virtual. And the only question is, do you want to have access to all your money or a proportion of your money on demand, or do you want to have some other human in between you and your money? Right? That's really the fundamental question. If you really want self-service, which I think most people will go to self-service, you know what I mean?
Yeah.
It's like pumping gas, you know. My mother is sort of the age where she's like, Fred, I do not pump my own gas, you know. And I'm like, well, you know, we're gonna have to find a gas station for you because there's very few places in LA right now where they have guys who pump your gas anymore. She goes, I refuse to pump my own gas. You know, like, so you know, like, but
she can move to New Jersey, Fred. We don't allow self-serve here.
You don't?
No.
What? Okay.
Well, no, it's the only state in the union. I think it used to be here in Oregon, and I think Oregon now allows it, but it's no self-service.
I just think that my thesis is the apps offer such a convenience that as we get older, as our generation peels away, we get to the next generation where Gen X is the old guys now, you know, not the boomers, right. You know, that, you know, we're going to see more and more and more people just use these apps for everything, you know, and money's going to go digital. Money goes completely digital. And, you know, you kind of wonder why you need these products on Wall Street, like ETFs and other things. Like you kind of just want Bitcoin, you know, you
Yeah.
kind of just want Bitcoin in various forms. Like, you know what I mean? Like, I think a lot of these products are just, you know, a transition kind of thing. But I do think that we are going to a purely digital economy. And that's kind of what Tom Lee, you know, when I met Tom Lee initially in 2019, and he, you know, he really made this case, and I think he said it was sort of a demographic case that, you know, you are going to we're going to a world where, you know, this is your life. You carry your life with you, right?
Yeah.
Everything is in your phone, right? Everything is, and it's, you know, it's secure, biometrics, etc. You know, but for the most people who don't have, you know, more complicated hardware setups, you know, multi-sig face, whatever, you know, all this stuff. But for most people, this is their phone. This is their phone. This is their life. It's backed up, but, you know, they need something, they get it here, you know. And I feel like that's just where we're going. And then the question is, do I need to pay with a Visa, which is I have to pay my bill every month, or do I pay with stable coins that are coming out of something, you know? I think for most people, stable coins coming out of a pot of stable coins like cash, that's more like how more and more people are going to live like that, right?
Yeah.
And then, you know, there's going to be some fraction of the, you know, the lower class and really the lower class, the certain, you know, the bottom 20%, they're going to be paying these 20% interest rates, right? And they're going to be these predatory interest rates on credit cards. But I don't think credit cards are needed anymore, right? I think we're going to move away from credit cards.
Fred,
and we're
think
going to go
about the narrative
So-
that some politicians have used to say that Bitcoin is a vehicle for criminals, right? When in fact it's U.S. cash, physical cash, that has a high propensity for illegal use. I mean, illegal transactions almost always prefer physical cash, right?
They do now, but they may not in the future, right?
Oh yeah,
They
there
may
you go.
they may, you know, look, I'm arguing for Elizabeth Warren here, but like, you know, listen, you know, they may prefer Bitcoin. You know, they don't quite yet. The underworld hasn't figured out Bitcoin yet, you know, but they
It's
will.
not, yeah. I mean, cash
They will.
really is close to untraceable. You know, damn close to it. So,
Anyways, I'm gonna hop.
all right.
We're talking
We'll
to
see you later,
you.
Fred.